as many of the touch points that we can, and of course bring as many answers to you as we possibly can as well. And moving now to the Johannesburg Stock Exchange. Now they've announced that they will provide relief measures to businesses in financial distress due to this COVID-19 pandemic. The JSE will grant distressed companies extended payment terms of between 3 and 6 months with no interest charge, and this will be done on a case-by-case basis. Though the JSE will also be increasing the amount of cash disbursements given to back to small and medium stockbrokers who are on the JSE's Enterprise Development Program. And to tell us more about these, I'm joined on via Skype now by JSE Group CEO Leila Fourie. Thanks so much for your time this morning, Leila. Welcome to Morning Live.
Morning, Sakina. Thank you.
So why did the JSE resolve to provide these relief measures if, of course, the objective is to allow for the market forces to take their course, as it were?
So, of course, Sakina, market forces must play out on how our stocks trade, and that has happened, and we've seen enormous ups and downs over the last couple of months. But what I think the crisis has indicated to us is that big business has a role to play, and we have a social responsibility to make sure that we support our real economy. And this is a very small way in which the JSE, symbolically and quite literally, is able to help out those companies that are negatively affected by COVID. Now, a large part of what we're doing is focused very much on the small and medium enterprises, and these are the sorts of companies that typically get worst affected by a crisis like the COVID-19 crisis.
Now, Leila, the JSE says that this relief will, of course, be granted on a case-by-case basis. So what is the criteria for a business to actually get this relief measure?
Well, Sakina, there are a couple of relief measures that we're putting in place. The first one that you mentioned is the extended payment terms. Now, extended payment terms will mean that companies don't have to pay their JSE bills for between 3 and 6 months, and it is very much on a case-by-case basis. So the company will have to be under distress as a result of COVID-19. In addition to that, what I think is really important is that we are trying to stimulate activity, trading activity in the small and medium enterprises. So we are providing support for our small cap companies that are listed on the exchange. And particularly what we're doing is we are reducing trading fees by 50%, because what happens in a downturn is that traders and investors don't want to trade in smaller companies. They want to trade in large companies. Because there are more stocks and it's easier to get out of those stocks when trouble comes. And we're also going to offer those smaller companies a 25% discount when they want to raise capital. Now, you can imagine that in a crisis like this, cash is king, and small companies need to borrow and they need to raise capital. And so this really reduces the financial burden, and in some ways it immunizes them against the negative effects of the crisis.
Now, Leila, you also mentioned relief for small to medium brokers. Let's talk about that and the criteria, because I understand that they would have to be 51% black owned.
Indeed. So that is part of our development program, and we already do offer our smaller black brokers a 33% discount as part of our general development program, and we're going to be increasing that for a short period, just for the next 3 months, to 50% discount. And that is really not explicitly corona related, but really as a gesture of goodwill and to try and support the smaller organizations that always typically have some difficulty in building momentum and building critical mass in the beginning stages of their business.
And Leila, you know, since the beginning of COVID-19 and the lockdown, we've been talking about the impact that this pandemic has had on businesses, and speaking to specifics. But you kind of have a bird's eye view, if you will, as the JSE. What sort of impact are you seeing?
Well, I think in many ways the pandemic has been as much a health pandemic as it is a data pandemic. And I think what happens when there is a lack of information is that people panic and they react very strongly. So we saw the listeners' pension funds reducing by almost 30% in the month of March, and that then bounced back by 14% in April. And I think one of the big reasons that those values have bounced back so well, and they're still way below where they were at the beginning of the year, but one of the reasons is that there is more information that's being shared with the market generally. And we're seeing this as a worldwide phenomenon. So we bounced back by 14% in June in all of our stocks. And the All World Country Index, which is all stocks across the world, bounced back. It rose by 10.7%. And so the improved news flow and improved access to information is definitely happening. We are going to see a lot more volatility, I have no doubt. And it's really all about how quickly we can get out of this lockdown period.
And that's an interesting point, because speaking of volatility and the uncertainty surrounding this pandemic, how long the lockdowns would last, not only in South Africa, but in other countries around the world. How much of this do you think the markets can realistically still stand before things become critical?
Well, I think the markets have ironically proven to be resilient. I think the big difference between what we're experiencing now and maybe what our forefathers and our grandparents may have experienced during the Great Depression is that in many ways there is a much bigger involvement by government. And so government coming in with their fiscal stimulus package just recently, both in the US, in all of the developed countries and in South Africa, with interest rates coming down the way they have, these sorts of responses have had a very big effect. Now, the government are in a very tricky position, and there are very complex trade-offs around whether to continue the lockdown and whether to stop. And unfortunately, in many instances, emotions tend to get in the way of facts, and they make us all experts in very complex epidemiological diseases. And I think that what we do need is to start to try and stimulate the economy, and we do need to get out of lockdown, because the economic effect of having everybody at home, and particularly small businesses, so I'm talking about hairdressers, nail salons, non-essential retail goods, all of those companies cannot survive. We've had already 1 month completely down. We're into the second month, and much more than that would be untenable, and it'll cause unemployment, and that has a very serious long-term drag on the economy. So we are in a difficult position, and we certainly do need to start putting in place proper testing that we can enable people to go back to work and social distance in a more effective and in a more economically friendly way.
Well, we have to unfortunately leave it there, but thank you so much for your time this morning. JSE Group CEO Leila Fourie and the Johannesburg Stock Exchange has announced relief measures to businesses that are affected by the COVID-19 pandemic and that are in financial distress currently.